Welcome back to Market on Close. I'm Diane King-Hall here at the New York Stock Exchange in for Oliver Rennick. Let's wrap up the week with Phil Streible, Chief Market Strategist at Blue Line Futures. We're going to dive into a look at commodities, metals, etc. Phil, it has been a packed week this week. We had the dock worker strike that started the week. We're ending it with, it seems like, at least a temporary kind of agreement there. Rising tensions in the Middle East. Today's jobs reports, all of these impacting a variety of assets, especially when you think about crude oil. What's been your takeaways this week?
Yeah, well, luckily we dodged that dock worker strike because I think that would have been like similar to like a situation like COVID where you see no new inputs coming in as far as commodities. And then what would happen is that we would naturally utilize all the supply that's available in the United States, and then prices in general would rise. That would be an inflationary headwind that we see having an impact on prices and potentially impacting the direction that the Federal Reserve will take as far as cutting interest rates. But yeah, just across the board, that sheer volatility in the market, especially crude oil futures, up about 9% for WTI on the week. That's also going to weigh in where not this next CPI report, but down the road, people are going to also feel it at the pump, and we're going to see it in that data. And, who knows if it does start to take some of these interest rate cuts really off the table. I know we did see a repricing on that next Fed watch tool with about an 80% chance of a 25 basis point interest rate cut.
We did see a repricing on that. And that's something, to go back to your point about crude oil. Before this week, crude oil it had come down a lot. But then you saw these escalating tensions in the Middle East, and then crude oil has continued to push higher all week. Are you concerned that there's going to be some inflationary pressure on the horizon quicker than we expect?
110%. And really what turned it around before was the backdrop of China and their stimulus measures. China is the number one consumer of copper. They're the number two consumer of crude oil. And it looked like they were ready to do whatever it takes to hit their 2024 GDP growth target. They modified monetary policy by lowering rates. They modified and helped improve their property sector by lowering refinance rates. And then their capital markets, you look at their stock market, holy smokes, that was the biggest short covering rally I think I've ever seen. And I've been a commodities broker for about 25 years. When they come out and they encourage stock buybacks like that, you just saw this short covering rally lifting most of the commodities and commodities that are China related. Even soybeans got a huge boost earlier in the week. And we also saw, other commodities out there that, again, China plays some role in, all lift up.
So for crude, what's the path that you think crude oil is going to continue to push higher?
So you look at the volatility in that. That average true range, just looking at the screen right now, jumping up to $2.50 a day. So you gotta strap in if you're going to trade that thing. It did settle right just below the 200-day moving average. And you remember just a week or two ago, they were saying there's plenty of supply out there. China was slowing down, U.S. economy. People were chattering about recessions and things. You look at the labor market, you look at everything out there. Definitely things have turned. We need to get above $75, I think, on a closing basis on the November contract in order to make that run back up to 80. But I don't think that the current administration wants to see $80 crude oil, at least anybody even talking about higher prices at the pump or higher crude oil ahead of an election.
No, you're right. They certainly don't want to see that ahead of election. And crude oil had been coming down because there were all these worries about oversupply, especially like when Saudi Arabia was talking about, reducing certain caps. All right, let's switch gears and take a look at metals. We've seen silver continues to rally. It had hit another all-time high. What are you watching when it comes to the levels in silver, or even obviously gold has pulled back some today. That makes sense. But what levels are you watching for both silver and gold?
It was the gold market that reached the all-time highs this week. Now, it took a little bit of a breather because of the fact that some of this data has been a bit supportive. So you're seeing a repricing because you have to think about gold, what's priced in. And I think it was almost a perfect storm. You saw that 200 basis points of interest rate cuts were expected, 100 at the end of this year and 100 in the next year. But you get this hotter data, it brings that down, and gold futures naturally have to come off a bit. Something I was talking with my coworkers about is that the 2-year Treasury Treasury yield, as high as it is right now, 3.86%, huge jump up today, about 20 basis points. You saw the last time we were at that level was August 30th. Gold futures were about 25.15. So we might be a little ahead of our skis on here. I'd like to see gold futures hold up. I'd like to see central bank buying and other people come in if we do get any kind of correction in prices. But you got to be a little bit cautious here, especially when you start looking at the correlations between 2-year Treasury yields and the gold market.
Okay, that makes sense. And thank you for the correction on that. Silver, not an all-time high. Gold hit that all-time high this week. Let's take a look at copper futures. They've been on the upswing again. You talked about that massive rally that we saw with the China stock market and off the back of all the stimulus measures. Are the recent gains that we're seeing in copper purely a China story, or is there more to this?
No. With gold near at record highs, silver breaking through $33, many traders want to broaden their exposure to the metals complex. And I think that that's a great proxy as the copper market. The fundamentals have greatly improved since testing $4 in early September and remained supportive for this fourth quarter. We've got constrained mining supply. Shanghai and LME inventories have declined. The demand has increased on any kind of pullback. And it is one of the best conductors of electricity. So it does make that green energy transition the main product to be involved with. I think you've got a rate effect. Lower interest rates could spur automotive demand reasonably quickly. You could see an uptick in housing starts as well because of that lower interest rate. And I think your tailwind is that global manufacturing, although it's been weak, we have not yet seen the effects of these stimulus measures, the interest rate cuts in the U.S. and Europe, Chinese stimulus. So we are in the camp that global manufacturing will pick up in 2025 and prices could retest those May highs.
And really quickly, Phil, before we lose you, because I know we're short on time, but I always like to hear your insight. What's your outlook when it comes to crypto, Bitcoin, Ethereum, et cetera?
Coiling back and forth, holding the 50-day moving average. We don't want to see it close below 58,500. It is a proxy to the NASDAQ. So with U.S. equities turning back up, this is a friendly environment for the crypto space.
All right, friendly environment for crypto. Phil Streible, Chief Market Strategist at Blue Line Futures. Thank you, Phil. Have a great weekend.
You too.
All right. Thank you. Let's check in on the developing story.